Hey everybody, DayTraderRockStar here, and this is the high probability watch list for the week of, and I think we'll probably be into June, what's the Monday's date? June 11th, I was thinking of saying that. June 11th. I want to jump right into this, and that's the tradometer, or actually a Rambot signal just popped up there. But I wanted to jump right in here. I'm in the middle of research, and I tell you, this market feels good. We've been killing it. I mean, everyone that we're coming together in the room, especially in the chat room, big shout out to Maximilian, Anthony, Rob out there. All the futures traders are just nailing the levels. I tell you that it feels really good in the trading rooms. Trading along with people, and I just feel like going forward here, things are starting to really shape up. I know there's going to be little dips along the way, but this slow, steady decline on the S&P is feeling really good. And we are extended, and the worst thing to say is everything's feeling so good. That's when the market really gets hit. And to start off on the watch list, let's talk about the market radar going out, where we take a look at the S&P 500 cash chart, and you can see the top trend line here. This is an important trend line for me. I trade a lot of channel lines. You'll see a lot of these setups are based off divergence and channels, and we're going to be going into that a lot this week because the setups are just coming. And what we're in today, BLL, the CHK, all these here are just textbook high probability setups. This watch list is so valuable sometimes to get to understand what we're looking at in the week. You just have to build other parts of your trading. Get things going. Get the organization going. The research comes to you. These are absolutely fantastic setups, and we're catching them. And I got such a great list here that I really want to stress. Do what it takes. Do what you need to do to get yourself ready to take advantage of these trades. All right. Even if it's with options, the stock. I mean, there's a great resource here, and it's like I said, it's happening right now. The markets are acting great. The tradometers, pretty much just nailing it. All right, let's move on. So that's the CHK, but let's go back to the SPX. I'm looking at that top trend line. I was saying that was going to be my target for this next move up, and we started turning back up, and I said, all right, we have a good target. We'll probably get through this recent high, but there's this top trend line here. And when I say underlying, I actually mean an underlying pattern that's playing out. A lot of people don't recognize. They see this downward channel, then a pop, and then a retracement, almost a perfect retracement, then a bounce. Well, this bounce is actually part of a bigger pattern, and it's great that we actually bounce off of this retracement. It shows good strength in the market. Everything's fine. And I do believe we're going to actually move up to the highs. I think we're going to move up to the highs. The question is, do we get through this level a little bit further, and we get up to an area of about right around 2,800? I think that's pretty fair guess that we actually get through this. Now, there's always news out there that can move this market down, but say there's no news. Say everything is just copacetic and kind of cool and nothing's going on. And, we're going to have to continue to just monitor these setups, especially the ones that we're talking about the last 2 weeks. The consumer defensive stocks have all been just lagging, and now they're starting to catch up and start to rotate back up. And we've nailed some of these bottoms, like the BLL. We waited for that reversal candle. And the Altria is a divergence. The CHK is a perfect HPS flag. All these here just, fitting the criteria of a trade. Taking it and taking it off. So things look good. I'm not going to guess. I'm not going to predict that we're going to move down. I know there's some traders that are betting on some downside. They're starting to pick up some puts up here. You know what? If you look at each time that we got overbought, there's a good shot that we actually can pull back. Pull back there. We got overbought. Pull back here. We got overbought here. There was a couple days before we got that pullback, and then we're up here and we're chopping around and so we're back up here. So it's a little bit harder to read, but typically when you're up at this zone, where we're kind of extended here, and you're up against a trend line, the history tells us to watch for a little pullback. Now, my argument will be that I think we actually, a lot of people are looking at that, or they're saying the market's extended. They're taking these positions to the downside, and they need to be taken out. So we need to actually get up a little bit further. think that 2,800 is a good level for now. Oh, yeah. So look at this. Look at this. I got a lot of stocks to go over. You hear those bells going off in the background. I apologize. That's on the dashboard. I have a little ice latte today, or something like that. All right. So I'm also doing here, and I just want to start off. Oh man, I feel like I'm in a monastery. I also want to start off by saying that I have a lot of great members who contribute to their research, and they throw me some of their stocks that they found. And they know what I look for. They know I have a strict criteria. They're fully students of the HPS methodology, and when I see their charts, I'm almost proud to say, like, wow, this guy knows what he's doing. It's exactly what I would find. So I want to give a recognition to Danu out there, who always comes in and gives me his research each week, and I go through his charts, because I know his charts are just like the ones I want to find. So he had, helped me out a lot this week. Cut down a lot of my work, because they were setting up, and it just takes time to go through and find them. And so I want to start off with his few stocks that he likes, and I'm putting them out there because I like them too, because they do fall into a criteria. This is not a love-hate relationship we have with the market. This is almost a scientific relationship. If something meets the criteria, we want to be part of that. So there was a couple here that I probably don't see myself getting in, but there is one. This Lamb Western Holding, very strong stock. Look at this. Going back here on the day, it looks like it IPO'd in 2016. It's never really pulled back. Last time we looked at this was January, where we had a divergence, and you can see the results of that. And then I haven't looked at this in a while, but you see this candle here? That candle right there. We took out the lows, and we held above that 20 line. So officially that's a divergence. And on the divergence on a pullback holding the 50 is usually a good sign for that pullback to end and to start to move back up. And that's what's happening today. We're actually taking out that candlestick high. That in one way is a bullish setup. And then, it's not the most interesting stock, but, showing strength and showing a divergence.
NQ Tradeometer overbought.
So gotta like that one. Gotta like that. And Dean Foods, I'm not a big fan of this stock because it's suffered stock rot. But you can't deny there is a nice little pop here. Something came alive on that and then drifted back. And, you can actually see that we're kind of putting in a bottom here, almost a double bottom, and we're holding off the 20. So it looks okay. But to pass it on, I'm going to pass on that one myself. MGM. And again, these are because these are divergences. And, the new definitely, looks for that either double bottom divergence where the price comes down to the same level multiple times, or at least makes that lower low versus the higher low. And this is starting to hold up above that 20. So you're starting to recognize there's something going on here. There's other things here on this one. MGM, there's kind of a small little, there's a nice gap up here. That's one thing you have. So you have a kind of a target of resistance. Lots of times you'll approach that when you gap down, you'll make a couple attempts to get through it, and then you can actually drop off. In this case, you can see 5 to 7 day pullback, back up to the gap, reverse. Now we're kind of coming down to the lower trend line. So this has actually a channel effect on it. So you're in the lower part of the channel. It does not look good. Today does not look good, but that doesn't mean that that divergence is not starting to show up here. We're starting to hold that 20 level, and that's what we got to read into. Even though we're having a kind of a negative day on a stock today, doesn't mean it's not perfect at this point, because you're going to only get the best positions if you buy into that weakness. I'm just going to compare it to some others. So I'm looking at the other casino stock. Caesars is also down, and the market's trading higher. So there's something to be said here on the MGM. Oh, what am I doing here? So I kind of like this here as a divergence. And a channel. So a divergence channel. So I have to decide what I want to do with that. I'll probably make a decision by the end of the video if I want to get in a position here. I'll watch it the rest of the day. Maybe we'll take a position over to Monday. But I have it circled. All right, here's your 5-minute chart. That might even help with us. So we sold off early this morning. We bounced down, chopped, bounced back down, basically double bottom. Now we're flagging out. Actually, this looks pretty good. That's on the 5-minute. The hourly, just getting oversold. Again, we're going to look at a channel, big channel. We're at the bottom part of that channel. And the daily. Come on, let me fix that daily. And what we want to do is rotate through all the time frames. The daily's giving us that divergence and that upward bias there, but nothing that looks weak today. But I'm not calling it weak. All right, so we're going to move on. I circled that one. That'll be in focus. Now, here's the one I like, IBM. And the reason IBM has been it just can't get out of its own way. You know, it's just every time you want to get into IBM, you get your moves based off of our indicators. No problem. We could trade those. Look at that divergence there. Look at that this divergence reversal candle and this divergence reversal candle. You can even see it if I zoomed in. You'll see those higher lows and lower highs and lower lows. So, you know, to have the right combination, just like we looked at on BLL, we said, all right, BLL, we're going to look for, we're around that trend line. There's a good shot that we could actually flush and then push back up. We're already oversold. So I want to look for one last little key here, and that would be a reversal candle. We got that, and we jumped in it harder. I actually was in it, and then I doubled down, and now, you know, I expect this to be the bottom here on this decent move, and I think we could actually move up to that 38 level, which we're almost there anyway. I think that was our target. But, you know, the same thing, going back to IBM. You know, I apologize. I feel super hyper today. I'm just loving the trading and loving being in this market and loving these setups now. Now I just want the weekend to get by us. And I want this all to play out. So I'm liking this IBM a lot down here. There was a nice bottom. There was kind of a breakdown here. We tagged it. We broke down through it. I want to concentrate on this line right here. Because we did come down. This was a good touch of it. We came down, consolidated, broke down through it, came up, chopped around it, came back down, came back up to it, chopped around it. We are extended on the daily. Daily here actually is not that bad. We could actually push up a little bit higher. We're pinned under the 50 period moving average. The gap up here at 152. And you might want to consider this a divergence. I think it's close enough to be called a divergence. So just because IBM has worked out